Well, hello. My name is Armita, and I'm a protocol researcher from Messari. We are here today to discuss building the financial backbone of tomorrow and what that means. We are here with our esteemed and talented panelists from Plume, Pyth, and Sonic SVM. And yeah, we want to get into it. So just to give a little bit of background, DeFi, when it started, it was just about lending and borrowing and simple swaps. But now, fast forward, we are kind of in an era that DeFi has become very, very complex and sophisticated. So we do need to talk about more sophisticated backbone. So these guys here from Amazing Protocols and obviously our host, Injective, are really on the frontier of this move. So just to get a little bit deeper on the topic, what do you guys think about building the financial backbone of tomorrow? What does that mean, and what's the ingredient of that future?
Yep, I can go first. My name is Chris Zhu. I'm one of the co-founders of Sonic SVM. We are a chain extension on top of Solana, focused on attention capturing applications as well as real-time financial agents. So when we started building Sonic, one of the key kind of metrics that we're looking at is what we call circulating TVL. It's the money that's actually moving between ecosystems within our ecosystem across to, we're building a SVM with Injective right now as well. And we were thinking about building the financial backbone of the next era. We really think about it from three different angles. The first one is always going back to the user experience. And the user experience comes back to how fast the chain is, but also comes back to what are the applications on top of the chain. And then the second part that we think about is what is the framework of infrastructure that we're using. For example, we started building on EVM. We started really researching the different move ecosystems, SVMs as well. And then when Solana decoupled the runtime as well as the client code base, we decided to go all in with SVM. And then we built the first SVM that settles directly on top of Solana. And then the third really important question, and a lot of the panelists here are really, really good at, is to understand the regulatory clarity and then also to work with the regulators to kind of find out, what is the next step for us. So we think that to build the financial backbone of the next era, you have to consider all three of those things. And then help the teams that are, at the center of these conversations, help them achieve what they want to achieve. So right now we're incubating our super DEX, our perp DEXs, as well as bring a lot of other traffic from TikTok, Instagram, and building DEXs directly on top of the traditional social media platforms, which I can talk a little bit more about later.
Hey, I'm Michael James. I oversee the institutional business for Douro Labs, contributor to the Pyth network, which is a blockchain oracle. We're a blockchain-based cross-asset market data ecosystem. I spent the last 10 years at big banks, at Goldman, JP, in different trading roles across equities, FX rates, and spent a lot of time thinking about the future of finance and innovation and efficiency and being faster, having better algos. So I spent a lot of time thinking about what is the backbone, where is innovation happening, which really led me into blockchain and crypto, which is why I joined Pyth, because I think the work that Pyth is doing is a key ingredient as a backbone infrastructure player for DeFi to be successful, for DeFi to scale. The reason being is when you think about the different pillars of finance, you have the price layer, the execution layer, and clearing and settlement. Now we focus on the price layer. There is no finance without data, right? Whether you're in the back office, middle office, front office, doing independent price verification or fair value accounting, risk management, execution, you need data to do your job. So for us, in order for us to see DeFi scale and to be successful, we're taking that entire full stack of data from TradFi, and we're bringing that on-chain across asset classes, crypto, equities, commodities, FX rates, ETFs, et cetera. This is data that costs hedge funds, banks, institutions, millions and millions and millions of dollars year after year. It's collectively a $50 billion business. We're disrupting and transforming that market data industry, bringing that same data on-chain in a permissionless way so DeFi and developers can grow and scale and build financial products across asset classes.
Perfect.
Hey guys, my name is Teddy. I'm the co-founder of Plume. I guess, brief background on myself. I started my career in TradFi, worked at Coinbase on their ventures team, then worked at a DeFi protocol, and then worked at Binance for BNB chain. And so while I was at BNB, I was in charge, since I was based in New York, I was in charge of going after different RWA type protocols. And, when I spoke with these founders, they all had, sort of the same issue, right? A lot of the founders are very TradFi. At the end of the day, you're building on crypto rails, so there's a lot of disconnect in how the market viewed their product and how they kind of wanted to think about distribution and go to market. And so a lot of these issues that I saw before in the past is kind of what we're tackling at Plume. On a very high level at Plume, what we're building is an open blockchain focused on tokenizing real world assets with DeFi at the core. There's three main things that we're, basically focused on. One is infrastructure, two is distribution, three is this composability layer. So I'll keep it short, but on the infrastructure side, we've built all types of products to bring anything on chain. But the biggest question we typically get is, once these assets are on Plume, how do we get them into the hands of the right holders? So on the distribution side, we help a lot with, the go-to-market piece. We also have a strategic partnerships team that helps bring the demand side to the supply side. I think there's always this misconception in our database where if you tokenize something, people will come buy it, but it's never been the case. And on the third pillar, on the DeFi side, we have all different types of primitives, lending protocols, perp dexes, AMMs, and what we've seen is when you can couple the DeFi element with the RWA side of things and make RWAs feel more like crypto and less like RWAs, that's when you can actually get real users to, actually use these different types of products. So kind of like how the stablecoin found product market fit by being permissionless, liquid, composable, that's how we're structuring our entire chain and our different products. And today, we launched our mainnet around 3.5 weeks ago. We're the #1 chain now in RWA wallet holders. We have a little bit over 250 mil TVL, and, in our minds and from our perspective, there's a huge push right now for tokenized assets, not only from like the alternative type sector and the middle market sector, but also from institutional partners. We work with Apollo, we work with Superstay, we work with Ondo, and a lot of these different types of folks to bring these institutional grade assets on chain to provide these different yield opportunities for folks, not only in the US, but more so like overseas, where I think we're making 5 or 6% on treasuries is more important than some folks in the U.S. So that's kind of like the high level, and we're doing a bunch of things with different chains. Injective is one of our close partners as well. We are pushing out a few products with them that I'll talk about later on today. But yeah, I think from tokenized assets and kind of coupling this with the DeFi element is really where we're seeing a lot of different projects and different trends in the space kind of go towards, and we're happy to be here to kind of help push the sector forward.
Yeah, amazing. So we can see that mostly we are focusing on the throughput and accessing real world data and then the speed and being user friendly. Just before delving more into that, I want to take your what you guys think on the regulatory aspect. So what we are seeing, so for example, let's say RWAs in terms of real estate. So we can tokenize that, but when you're looking at a specific country or jurisdiction, sometimes they wouldn't follow the same rule as a different country. So I want to know, what do you guys think of this? Like, is there a way to balance it? Is there a way to create an infrastructure that kind of, overcome these kind of issues?
Yeah, I can go first. So like from our perspective, right, we work with different infrastructure partners in different jurisdictions where we can leverage their licenses to go to market quickly for our different partners, right? So if there's someone tokenizing an asset in a different part of the world, we can work with the local KYC provider on and off ramp to get the right infrastructure in place for them to push forward. What we have been seeing though right now is a lot of capital formation actually happens offshore. It happens in Asia, in Europe, LATAM, and what we're trying to do is bring that back to the US. And so most recently, we had our general counsel, Salman, who joined us from the SEC, and we've been doing a lot of actually policy work in DC. I think it was like 4 weeks ago, me and my co-founder, Chris, and Salman, we went into the, basically, we met with the SEC Crypto Task Force to talk to them about basically the state of the RWA landscape right now and where there could be a lot of help from them and how that can really help push things forward. And the main thing that we're pushing for right now is an innovation exemption on our core product called Nest, which is essentially our yield streaming protocol. And why this is important is because right now when we offer these different products to folks, the U.S. is geo-fenced out, right? And we want to bring this innovation and this capital formation back to the U.S. for different retail or institutional. And so I think the regulatory scene, it's definitely getting better. Like obviously, the Genius Act passed. I'm actually flying to Hong Kong tomorrow to do some work with the government there on their stablecoin bill as well. And so I think in these different jurisdictions where we're kind of pushing, whether it's like Singapore, Abu Dhabi, Hong Kong, US, there's definitely been a global trend towards trying to make tokenization work on a global scale, which is definitely great to see.
Sure. Yeah, I think it's super important to get the balance of keeping crypto and blockchain composable and open while also respecting different jurisdictions, and also just from an institutional perspective around privacy and KYC layers, consumer protection laws. I don't see a world where institutions are just going to go all on public blockchains and do all their business on public blockchains. If you ever worked at a big institution or on a big trading desk, information leakage is a very big concern. That's why we do sophisticated smart order routing and algos to hide our orders, to hide our sizes. Clients don't want banks knowing that their orders are out there. And so I think the balance is really keeping the base layer permissionless so developers can continue to build upon that while keeping the application layer more of a permission setting, so more flexibility at the application layer where different protocols can build off that permissionless infrastructure, but add their own permission settings or KYC or compliance layers on top of that. And I think that's probably the future. So I think, again, we don't want to start creating all these siloed different systems. We want to remain flexible, and I think the future is, from an institutional perspective, is operating on different chains, public blockchains, permission networks, private networks, off-chain, and you need that all to work together. Interoperability, and I think at the application layer you do need some of that more permission compliance settings.
Yeah, so our end goes a little bit different. We think about regulatory constraints not just as from the government perspective, but also from platforms which we build on top of. So before our token launch, for example, we built a mini app directly on top of TikTok that brought around 2 million users into our application. We then built trading features, speculative features that are more crypto native for these users, and converted around 500,000 of them to our token holders or to our product users as well. But we had to actually work with the platform on the regulatory constraints to actually understand what TikTok allows, what Facebook allows, what Meta allows on top of each one of these different platforms, so that you can actually bring those users in. Because if we're just talking about on the governmental regulatory constraints, then I think we're actually leaving a very, very large part of users behind, because we actually still need to onboard more and more users. So when we were able to do that, we were able to understand what are the whitelisted features on top of TikTok that allows us to combine crypto trading and different types of features, and where is their red line. And that differs by geographic location. So for example, one of our largest trading groups is currently in Korea, and 50% of our volumes coming from Korea exchanges, a bit from working with these local exchanges to understand how are their users thinking about crypto, and then working with TikTok to understand in Korea what are the features that we can actually push, what are the features we can push in US, such and so forth. So I think just outside of just the governmental regulations, the platform regulations are also really important for us.
Yeah, that makes sense. I can see how you guys focus a lot on the users, which is great. So now we can talk a little bit about what you guys are building with Injectives as well. So I know you guys are working on some native SVM layer. Just wanted to see your thoughts on that, and then what are the requirements and what does that mean?
Yeah, so when we first started working with Injective on the Injective SVM, one of the major initiatives that they were pushing is also the multi-VM future, and there needs to be kind of financial assets on top of each one of these VMs, and whatever is the cutting-edge technology was what Injective was adopting as well. So we started building the SVM earlier this year, and it's been very fast pushing into DevNet testing environments. So there's some better news to share in the coming months. But I think what is really important is that developers just have their tech stack that they're very, very familiar with. So the Solana developers that has already worked on SVMs, they're very much looking for environments where they can take their existing application, their existing technology, and then build and deploy a separate financial app, for example, on Injective. So that's ultimately our goal in rolling out the Injective SVM near second half of this year. Some of the largest applications that we see from Solana, for example, have also been tapping into this multi-SVM future, where the liquidity should be able to route through Solana itself and then go into different ecosystems. And that's some of the things that we work with Pyth on, for example, is the price feeds for SVMs. And because the interface for programs are the same, we can actually transfer them very, very easily.
Great. So just talking about the price feeds, and I wanted to know about how Pyth is getting all these like low latency data, and what does that mean for institutions?
Yeah, so we're very uniquely positioned as an oracle. Other oracles in the space, their nodes will scrape data that's publicly available on the internet or use third-party aggregators. It's sort of a central point of failure. If that API goes down, the entire protocol goes down. So we took an opposite approach, and we solved for two things. We solved for trust and for speed. And the way that we set up our model is we let the biggest institutions in the world across their given asset class monetize their data for the first time. I won't get into the dirty details of the market data landscape. It's a very broken system. It's very siloed. It's very expensive. But for the first time, we went out to the top institutions across crypto, of course, so we're connected with the top exchanges, the top market makers, and then we repeated that across every asset class. So we work with the likes of Jump Trading, Virtu, GTS, XR Trading. We work with some of the biggest regulated equity exchanges in the world, like CBOE, IEX, MEMX, MIAX. We're about to onboard our first cohort of Tier 1 US banks, which is going to be a very positive experience. And so we are building a very strong cross-asset market data ecosystem, the same data that large hedge funds and banks use to power their businesses from back office to middle office to front office. It's verifiable, it's trustworthy because it's coming directly from the owners of data. It's coming from the actual institutions who are trading those products. It's not coming from a third party, it's not coming from a middleman. And we solve for speed. We offer these price updates from 400 milliseconds all the way down to 1 millisecond. And as DeFi continues to scale, as it gets better, as we want to onboard more sophisticated players in capital, they're going to demand both trust and speed. Delayed fees, inaccurate feeds, it's very messy. That could create a very bad user experience. People could lose a lot of money. And so, yeah, that's the main thing that we're focused on, is creating high trust, high speed, cross-asset market data ecosystem. So any app in DeFi, whether you're building crypto or you want to bring equities or FX or commodities on chain, collateral, borrow lending, trading, perps, et cetera, you now have that trustworthy data to be able to go out and build your application. Where off-chain and traditional finance, getting that data is nearly impossible unless you have millions of dollars to spare. And that's why innovation in capital markets is actually being stifled, because the burden of these costs and complexities has just become too much of a burden. And so being able to bring that to DeFi to enable growth and scale, that's something that's really important to us and something that we're very focused on.
Just to follow up on that, can you share a little bit about collaboration that you guys are doing with Injective, and especially on RWA price feeds?
For sure, yeah. So Injective has been a great partner for us for a while, and they're really at the forefront with their iAssets initiative of bringing multi-asset class trading and activity and business on chain. We have multiple asset classes where we're feeding Injective across some of the biggest stocks in the US, Mag 7. We have FX, we have, I think we have metals now. And yeah, an interesting thing was when Circle IPO'd, we were the first, it was a cool little historic on-chain moment where we brought Circle post-IPO, same day, on-chain, and we made Circle available on 100 blockchains. Injective was actually the first, or Helix from Injective was actually the first perpstex to take that Circle and list Circle and had activity on Circle on-chain. So I thought that was a really cool little moment for us in our world, in our ecosystem. But yeah, Injective's been a great partner. We're here to support them with our data. They can continue to build out different asset classes, expand across regions, across sectors, et cetera. So yeah, it's been a really positive experience.
Yeah, that's great to hear. This Circle IPO definitely one of the biggest thing that happened within recently, and also major IPOs. So glad to see how we are evolving and being a part of this huge movement. So now I want to get to Teddy. So tell me about your collaboration with Injective. I know you guys are working on modular rollups, and how is that different from generalized L1s, and what does that mean?
Yeah. So, I worked at a pretty generic L1 before, and I think, for these larger chains, when, more specific verticalized projects need support, you can't really help them, right? So at Plume, we help a lot within like BD marketing on the tech side, we give different ecosystem incentives to help bootstrap initial liquidity. And then on the other hand, we have a strategic partnerships team that actually builds these different funnels to Plume. I think you can think of them as like B2B or B2B2C partnerships where we work with different exchange wallets, custodians, different funds, family offices, different trading communities. And the idea is, they think of us as kind of their savings account, right? And if they can fully just integrate with our main protocol that distributes all of our different assets and our yields out, then they can, for example, like if you're on Binance Wallet or OKX Wallet, you can go to the earn section, go to the RWA section, click on which protocols you want to deposit stables into, and then you get the yields bridge back. And at Plume, what we've done over the last year and a half is really bring all these different types of assets on chain. I think, when people think RWAs, they think treasuries and private credit, but we've also brought in some pretty interesting assets, like, solar farms, GPUs. There was some that wanted to tokenize their durian farms with us, camel farms. So there's a lot of interesting assets that basically differ based on their risk return profile. And what we've done actually recently, and we announced this with the Injective team already a while back, but we're taking one step further, is basically what we're doing is bringing our assets to their chain. And so from the Plume perspective, we've spent a lot of time bringing these assets onto Plume, whether they're more institutional grade assets or more in the alternative sector. And I think the biggest unlock for folks on different chains, like Injective, for example, would be that their users wouldn't need to bridge over to Plume. What they can do is basically invest in a wrapped representation token of the asset, but the actual asset yield token lies on Plume. And so it's just the bridging of stables from one chain to another. And the biggest unlock for them is that they won't need to deal with a lot of the headaches that we went through with bringing all these different types of assets onto Plume. And so you guys will see more next week, but there's some big players that we're working on with the Injective team that we'll be announcing sometime next week through our Nest product. So far we've brought in like Invesco, PIMCO, Carlyle, and these other institutional grade type assets, and there's a lot more that will be essentially bridging over to Injective so that Injective users can access essentially the marketplace that we have on Plume.
That's great. It seems like all the protocols, they have a few announcements that are coming in the future. I'm not going to put them under pressure to tell us what they are, but I kind of wanted to know, we spoke about, speed, real world data and everything, and make everything user friendly. What do you think is, underappreciated technology or a pillar that is very important to have this Web3 financial infrastructure that we haven't really spoke about or is going to be important in the next few years?
Yeah, I can go first. So we recently incubated a project called Donut, which is a agentic crypto browser. And because of that project, we started looking a lot into how the financial world is actually moving away from just human manually doing transactions, or on the HFT side, co-locating data centers so that there's faster transactions or more real-time communications, to a world where finance and financial transactions are being automated. This automation is happening not just on the back end, where all of the APIs are doing automations and people are just calling these APIs, whereas the agents are now going to different information sources and then retrieving those information and actually executing those transactions through, for example, a browser automation, right? So there's computer use from Anthropic, there's browser-based, and a ton of these automation software that allows for agents to do anything on the internet. And once that is possible, crypto, I think, is going to be the first area where that gets kind of revolutionized, just because all of our interactions are actually happening on top of web pages, happening on dApps, and all of that transactions actually happening on the front end, where the back end is done with these decentralized ledgers. So I think in the next 1 to 2 years, we're going to see that happen, and a lot of the existing infrastructure of user experiences are going to really be flipped, and we're trying to be there first.
Cool. Yeah, I think it's underappreciated. We've touched on it today, the RWA stuff, but when you look at the stats and numbers, the bulk of majority of on-chain activity is still in crypto. It's still very crypto native. Obviously, there's tokenized treasuries and there's funds coming on, and the sentiment has been very strong. But it's the majority of the users in crypto, but I think in the next 12 to 14 months, 12 to 24 months, I think we start to see more and more RWA type activity happen on chain. Institutions maybe agree, disagree, but I think everyone in this room collectively, we're working hard to bring over the entire off-chain economy and bring that on-chain across every single asset class. And we've all seen the benefits of underlying blockchain technology and the use cases of stable coins and some of the early RWA adoption, and being able to move money freely, being able to the ability to trade equities 24/7, the ability for FX settlements to be instantaneous or take seconds versus days to settle, the ability to build new financial products on chain in traditional asset classes. I think it's still very underappreciated. I think the next 1 to 2 years is going to be very, very interesting. And I think collectively our goal is to really make this happen and bring over the entire economy on chain and really hit all the benefits that we've seen the current use cases have. So yeah, we're really excited. We're helping to push that and play a part in that. But I still think it's, underappreciated.
Yeah, I think like Michael said, I think the RWA sector has a lot of room to grow. At least from what we're seeing now that our mainnet's been launched for a month. We, like I touched upon earlier, have these different, DeFi, we call it RWA-fi essentially, these different strategies where people can treat these RWAs like crypto assets and do, interesting strategies. Like there's this one specific strategy on Plume right now where someone can invest into like private credit vault, take that LP token out, collateralize it on Morpho, borrow against it, and then deposit into like a treasury vault. And I think that is pretty powerful, and it's still newer to the market, so we've been pushing it pretty hard on our side. But I think on the other hand, where we've seen a lot of underappreciated value is actually in the emerging markets. We've brought on a bunch of different institutional grade assets, like I mentioned before, and I think access is a huge key, especially when you think globally. And so there's a lot of partners that we work with in Africa, in LATAM, in Southeast Asia, where they could be neobanks or even just retail investors, where them investing into a U.S. institutional grade asset is a huge deal for them. And typically, in wherever they might be living, the financial infrastructure might not be, I guess up to par with like what we're used to. So being able to give access to these different yield products is something I think is pretty undervalued, since a lot of people just think of crypto as like almost like a casino where they can like lever up and do these crazy things. But at the end of the day, it's honestly changing people's lives, and that's a piece of Plume that I think we definitely want to highlight more as we continue growing.
That's great. Just the last question. I know, Injective and you guys are at the frontier in a decentralized finance and also building that infrastructure. But currently, a lot of these, traditional finance is kind of building in parallel with the infrastructure that we have. Do you think in the future we are going to see the convergence between these and just, everything's going to be on chain, or what do you think?
Sure. Yeah, I agree. I think it's still being built in parallel, and probably because the last several years have been built for very crypto native use cases. So these worlds still live in entirely different tech stacks, but we have seen the early adoption, stablecoins, some of the tokenized funds on chain. I think in order to really grab institutions' attention and take it more seriously and start building toward that convergence, they need a use case to enter on chain, right? Can they make more money? Is there a new client segment they could go after? And to be honest, like my opinion is that probably starts with retail and increasing the experience and the UX for retail and get more retail users, because institutions don't want to go on chain and trade with other institutions, right? Jump doesn't want to trade with Virtu. The reason why Robinhood is so successful is because they created this amazing app, great UX, it's very automated, it's very efficient, and that attracted some of the biggest HFTs and market makers in the world, and it's become very, very efficient. So I think for us, or for institutions to continue to build and converge and take it really seriously and want to operate and do business on chain, there needs to be a reason, and I think that starts with increasing the user experience, the onboarding, the custody, the wallets experience for retail, onboard the next 500 million, 200 million users, the next billions of capital, and that's really going to attract the institution's attention, where they'll have no choice but to start converging and really bridging to do business on chain.
Amazing. I think you wrapped it up pretty well. And I would like to say thank you to Chris, Michael, and Teddy for being here. And obviously, we can see that they're building the future. So give them a round of applause. Thank you.